Afternoon and welcome to your weekly Stock Charts TV show. My name is Tyler Wood. I'm a CMT charter holder, and today we're going to be talking about the GoNoGo charts. Right now, I'm dialing in from Mumbai, India. It's almost October 20th. I think for everyone there, we're mid-market on October 19th in the United States. Let's start with the S&P 500 and just talk through a few of these trends that we're seeing. Certainly not safe to get back in the water on the daily perspective for the S&P 500. Looks like we've come in and made a lower high here on the weekly, or excuse me, on the week NoGo trend, these pink bars, and of course some heavier selling the last couple of days, bringing us into that strong form of a NoGo trend. Those purple bars on the last two time periods. We also see in the GoNoGo oscillator a retest of the zero line. We're going to have to find some support there for us to relieve the equity market indices from a little further damage. But let's move on. As we always do, we start with the top level, looking at the asset classes to get a sense of the environment that we're going to be trading in. From this heat map, we can see that S&P 500 top line representing large cap equity index in a strong no-go trend. TLT, Treasury bond prices, also in a strong no-go trend. We'll take a look at interest rates here and Treasury yields in a moment. US oil back into a weak go trend, so some upward moves in oil as well as gold. We're going to talk a little bit about the indecisive whipsawing that's been happening in gold. We can see that the dollar index is strengthened again into those blue trend conditions to the upside, strong trend conditions. And then I've kept Bitcoin in this panel, bottom panel, looking at also a strong go trend. And we'll take a look at the cryptos in a second. But moving on to the 10-year Treasury yield here in the U.S., breaking out again to a new high after that consolidation period. We saw the GoNoGo oscillator coming from this overbought area down to a neutral level, building a small squeeze, and then indeed finding support. From that breakout, we're seeing a higher velocity move to the upside for rates. Interesting tweet this morning from CNBC. We now see 8% rates on 30-year home mortgages. The math they did was on a $400,000 house that adds about $1,000 of expense each month. Obviously, a lot of homes structured in those much lower interest rates that we saw over the last few years, but $1,000 more per month than we saw on home mortgage payments just 2 years ago. Certainly not a helpful environment for the American consumer. Moving on to the chart of U.S. oil, we did see that contraction, a brief stint in no-go territory while the oscillator was in negative territory. So enthusiastic selling in the oil markets, but recovered strongly. We've come back to retest the zero line from below on heavy volume. This ETF, USO, representing the oil fund, and we're back into weak form go trend conditions, perhaps even ready to make a run on these highs should we see the oscillator break above the zero line, indicating that indeed buyers are back in control. Let's move on and talk a little bit about gold. On the daily perspective, we have seen just an incredible rally off of this low. We do see that we're coming up against a pretty serious resistance level here on the daily time frame, but in weak go conditions, and we just busted through that zero line on heavy volume. We're at an overbought level of 5. Remember, the GoNoGo oscillator is a range-bound momentum indicator from -6 to +6, and our overbought conditions are at +5 and 6. If we zoom this out to a weekly basis, taking a look at gold, we've seen some real volatility over the last couple of weeks, and that gives us a sense here on the larger time frame that if we can break above this resistance area, there's definitely room to run for gold, coming back to these April and May highs that we saw on the weekly time frame. So we did include Bitcoin this week on the asset class heat map. I've taken a much shorter time period. Remember, this trade's 24/7. So if we're looking at a 30-minute bar on Bitcoin, we can see that this range-bound consolidated chop, the tightening and narrowing, just mirrors what we're seeing in the GoNoGo oscillator. Repeated squeezes being built on this very short time frame. And here we've broken out of a max GoNoGo squeeze. That sustained neutrality from our momentum oscillator indicates that tug of war that we see sometimes between buyers and sellers. Just look at the price range narrow here in these weak no-go trends before breaks to the upside, we start the new Go trend, and we've picked up volume as well. We are testing the zero line again, but we're seeing some of these trend continuation icons as the oscillator has found support recently. Let's see if we come back and test this this spike to 30,000 if that trend actually gets going. So as we like to do with the GoNoGo show, in the top-down perspective, we're starting with the asset classes. We're taking a look at some of these intermarket forces. But then when we think about the equity index, we also want to look under the hood and see what's happening from a sector level. We like to do a lot of relative strength work. And in fact, this whole week that I've been on the road in Delhi and Bangalore and here now in Mumbai, talked to a lot of different investors, large PMS funds, long-only mutual fund managers. Talked to a lot of the prop trading desks and brokerage firms, sell-side institutional brokerage, prime brokerage firms, as well as some of the retail-facing folks. And I think relative strength is just a very underrated tool within the technical toolkit. So for anybody who's thinking about trading, let's first do our analysis and see where we want to position ourselves. Now, the other thing that I want to point out is that trends work in both directions, right? We can be long-only investors, but for those who are looking for short opportunities, I think it's important to point out what's leading this market lower as we're seeing the S&P pull back into stronger no-go conditions. That's this price panel here at the top is the S&P 500. And so when we look at each of the sector ETFs relative to the index, consumer discretionary is pulling us lower. So is real estate in that strong no-go relative trend. These are the laggards or the losers. So if we just jump into the XLY, the ETF representing the consumer discretionary sector, we can see how that price action came in and really didn't even pause at what could have been an area of support here. We've broken down lower. And this is the daily perspective. We can see that we broke out of a max squeeze to the downside. Not only did momentum turn negative, but now we've seen volume on a relative basis. We've got heavy volume now on this selling for the consumer discretionary sector. Within the consumer discretionary sector, we can also look at the industry groups, and there are many in the XLY that comprise this this sector of the markets. And when we dig into the industry groups, we can see that the automotives in the top line have been in a strong go trend. Certainly, I'm not the only one watching news about the stalemate between the Auto Workers Union. We can also see that travel and tourism is in a strong no-go trend relative to the sector that's underperforming the market. So if you are comfortable trading to the short side, you can also use GoNoGo charts to start finding those ideas or those areas of the market that are the laggards. And thinking about opportunities to trade to the short side, we can just take a look at GM from that automotive sector industry group and see that that has been a consistent no-go trend. And remember, as trend followers, the really the holy grail for us is when we can see momentum resurging in the direction of the underlying trend. So we're in a no-go condition. Every time this oscillator comes back up and is rejected at the zero line, then heading back into negative momentum territory, we're seeing these red circle icons. That's the trend continuation in a downtrend or a no-go. So we definitely saw GM really looking for support here. We saw the oscillator bouncing around the zero line, and indeed it did not find support and headed quite a bit lower. We also noticed that the travel and tourism index within the consumer discretionary sector was a strong underperformer, meaning leading the market lower. And that's just a view of the index from a price action perspective. We're going to see how this ends the week, but certainly not seeing anything from the GoNoGo oscillator telling us that this trend is finding support right here. We still have enthusiastic selling at a -5, so that's an oversold area. Remember, we don't want to use our overbought and oversold strike points as a signal for a mean reversion. We want to wait for that momentum to turn. We could certainly anticipate that from an overbought region, momentum might cool, meaning price might struggle to go lower from here. But we're going to wait to see if this indeed reverses back before concluding that this is found an area of support. And I think when we dig into the travel and tourism industry group, we can see that there are a lot of opportunities for the short side. Booking.com, Booking Holdings Group, also in a strong no-go trend with a max oversold reading of -6 on heavy volume. That's got the glide path of a brick here as it fell off from this area of congestion. Vacasa, so Booking.com being a large cap name, Vacasa on the smaller cap side, also moving lower, looking to find this area of consolidation here, but breaking out of the squeeze to the downside, conclusively to the downside, giving us that trend continuation icon. And if we look at Vacasa, not just on the daily basis, but also on the weekly, we can see that this is a downtrend that's been in shape for quite some time. In several of our academic partner programs that the CMT Association runs, I get to talk to student groups all the time. And I think one of the important conclusions that we want all fundamental investors as well as the academic community to understand is that longer-term trends are driven by the fundamentals. We don't always know which area of the fundamental equation is going to matter. But when we see a weekly chart like this, there's definitely not anything happening in Vacasa that fundamental investors are finding particularly valuable at this point. So on a weekly basis, we're in a weak form of the no-go trend. We've got negative momentum down here at -4, and certainly an opportunity both on the daily time frame and even longer term time frames to think about short ideas. Now, when the market is in no-go conditions and we do want to spot short opportunities, I think it's also important to keep an open mind about where opportunities lie for long-only investors. And if you are looking for investment opportunities in the equity space, it's helpful to not have such a strong home bias. For those of us in the US, we've relied on the dominance of the US equity markets for the last decade or so, largely driven by our tech sector in Silicon Valley. But what I learned in Bangalore yesterday was that there's a thriving tech sector in India as well. And so this global equity rel map, so we're looking at relative strength, we're looking at global equity indices relative to the S&P 500. And we can see that the IBEX was in a period of strength relative to the US. We've fallen to neutral territory right now. The UK is also leading the US market. And then here's India. Strong outperformer for the last couple of months. And what I've learned over this week, talking to a lot of institutional investors, is just how dynamic and bullish their overall capital markets have been. There's a ton of participation here. We've got a lot of market breadth. We've had successful IPOs in India. And so just looking at the technical tools, not the story or the narrative, we can see that relative performance has been quite consistent, and India is showing its leadership against the S&P 500. So I thought it'd be fun today if we took a minute to just drill down for a second inside of that country level index. This is the INDA ETF representing Indian equities, and just take a look at a little bit more about how their market is structured and some other indices that you might want to take a look at. So the Nifty 50, that's their top large cap 50 names within the National Stock Exchange, trading on the NSE, has been in a consistent strong go trend here for the last throughout the summer. And we did see the seasonal pullback, same that we experienced in the U.S. equities markets, but certainly not as deep or as prolonged of a correction. Nifty 50 rallied back here in September, and indeed is right now, today, in a neutral territory. I think global markets generally have been responding with some weakness to geopolitical tensions, but we do see the India market holding up much better. This is the Bank Nifty, so just the large cap banks. I believe there are 20 securities held in the Bank Nifty. But we've also got other indices that we can take a look at. So the Nifty Junior is the next Nifty 50. So if we're looking at the S&P 100, this would be the next largest 50 names by market cap. We also have a mid cap index here for Indian stocks. That's been a consistent outperformer and quite an opportunity for a lot of investors. And then down here in the bottom panel is the BSE Sensex index, and the Bombay Stock Exchange is similar to the New York Stock Exchange. It's in Lower Colaba, geographically similar and historically similar. Had the great fortune of spending some time there both last fall and again this week. And with the BSE Sensex, we're looking at 30 top industrial names, very similar to our Dow Jones average. That's in a weak form NoGo trend, but we are seeing the Nifty representing what might be equivalent of a midtown NASDAQ kind of an exchange. The Nifty is still outperforming as well as the mid cap. Now we can get into the sector groups within India as well, and we can see that there's a much better breadth within these markets. We see lots of areas outperforming. This is the public sector and private sector banks against the Nifty 200 in the top two panels. Again, we're looking at relative strength now. The last heat map was just showing us our absolute trends of those equity indices and different areas of the market that we might want to consider. These are the sector groups, and we're just looking at relative performance. Again, each sector relative to the Nifty 200. And if this screen will load, I'll be happy to share more about this picture. There we go. Internet is not as fast in hotels as it is in my home office, so thank you for bearing with me. We can see fast-moving consumer goods coming out of a no-go trend back into relative leadership against the Nifty 200. Also, their media index and metals maybe turning the corner here. But in the bottom three panels, we see areas of the market that have been consistent outperformers. And that includes consumer durables, the automotive index, and their real estate. And it's just an incredible time to be in India with all of the infrastructure projects coming to completion. It's a completely different looking country every time I come back because the growth rate is so fast. The other things that a lot of these investors point to is a lot of foreign direct investment. We've seen the evolution with the Aadhaar card. So it's a government-owned tech stack where we have the ability for folks to open brokerage accounts or bank accounts in an incredibly fast process. All of the know your customer protocols are automated now. We've also seen the Geo revolution. That was a big bet by Ambani to equip literally every every citizen of the country with high-speed data access through smartphones. So really dynamic market, really interesting to see this relative outperformance, the improved breadth. It's not just a magnificent seven here. There's the long tail of smaller cap names that are picking up liquidity and in those strong go trends. So something to keep in mind for all of us when we're thinking about our asset allocation matrix. For the equity portion of our portfolio, we don't have to stay within our own home country. We can look for opportunities outside. And technical analysis with that relative strength concept can give us a really great comparative lens for thinking about where those opportunities may lie. So thank you so much. Sorry if today's episode is a little short. You just get me today, and it's a little after midnight. So it's important to wrap it up here. And I look forward to seeing you all next week. Hopefully, Alex will join in our GoNoGo show. I'll be calling in from Dubai in the United Arab Emirates. So until I see you again, take care of each other and trade them well. Talk to you soon.